I'd like to thank you for joining today's webinar, Investing in the American Dream. I'll begin this webinar with a brief welcome and some opening remarks. I'll then provide you with some background on immigrants and immigration reform, and I'll then turn the presentation over to Marisabel Torres from the National Council of LaRaza, who will walk us through the findings of NCLR's recent report, Banking in Color, which profiles immigrants' use of financial services. Then I'll invite Blondell Pinnock from Carver Federal Savings Bank to share some insights about her institution's experience working with immigrants. And unfortunately, one of our guests couldn't be with us today, so Blondell will have the stage all to herself. And finally, we'll open up the discussion for a few minutes of audience Q&A at the end. Before we begin, I'd like to provide you with a brief overview of the Center for Financial Services Innovation. CFSI is the nation's foremost authority on consumer financial health, and we lead a network of innovators committed to building better consumer products and practices. We work to achieve this mission in 4 ways. We serve as a hub for innovators by fostering dialogue and collaboration through events and networking opportunities. We conduct consumer and market research to inform the dialogue around high-quality financial services. We provide grant and seed funding for nonprofits and startups looking to bring new and innovative ideas to market. And we offer consulting services to financial institutions looking to improve their financial products and practices. And as part of our efforts to drive innovation in the financial services sector, last week we released a report titled Investing in the American Dream: How Financial Institutions Can Build Long-Term Relationships with Immigrants Before and After Immigration Reform. This report was written in partnership with the National Council of LaRaza and was made possible by the generous support of City Community Development. The report explores the growing opportunity for banks and credit unions to serve immigrants, particularly those that stand to benefit from comprehensive immigration reform. The report begins with an overview of immigrants in the United States. It goes on to illuminate the financial needs of these consumers. It then offers 7 concrete strategies for providers to adopt in order to reach these consumers. And it concludes with a series of short case studies about providers who are successfully serving immigrants today. And after this webinar, I encourage you to download a copy of the report itself, which is available on our website at the link provided on the screen. Before we dive into the findings of this report, I'd like to say a quick note about terminology. The report itself, as well as today's webinar, will focus on the financial service needs of low and moderate income immigrants and the opportunities to serve these consumers. For the remainder of this webinar, the term immigrants will refer to the entire population of low and moderate income foreign-born residents of the United States, which includes both legal immigrants and undocumented immigrants. The term legal immigrants will refer to individuals who are residing in this country legally in the various ways described on the screen. And finally, the term undocumented immigrants will refer to immigrants who have arrived in this country without legal documents or who are in violation of the terms of their admission. And I'd like to note here that while these terms are used throughout the remainder of this report and the webinar, immigrants are not a monolithic group, and their needs vary considerably within these segments. So with that, let's get started. There are approximately 40 million immigrants in the United States, comprising nearly 13% of the total U.S. population. And as I just mentioned, this group includes both legal and undocumented immigrants. Of the entire foreign-born population in the United States, 29% come from Mexico, 5% come from India, 5% from China, 4% from the Philippines, 3% from El Salvador, Vietnam, Cuba, and Korea, respectively, and 2% from the Dominican Republic and Guatemala, respectively. Together, immigrants from these 10 countries represent approximately 60% of all immigrants residing in the United States. Immigrants live in all 50 states, but over half of them live in just 4 states: California, New York, Texas, and Florida. California, New York, and New Jersey have the highest proportion of foreign-born residents relative to their total population. More than 1 in 4 residents of California and more than 1 in 5 residents of New York and New Jersey are immigrants. On average, immigrants are younger than the U.S. population as a whole. 59% of foreign-born residents are between the ages of 18 and 44, compared to about 1/3 of all U.S. residents. Immigrant households also tend to be larger, more likely to include children, and more likely to be multi-generational than U.S. households overall. As you can see, immigrants tend to have received less formal education than the U.S. population as a whole. Interestingly, though, approximately the same percentage of immigrants and all U.S. residents have continued on to higher education. 27% of immigrants and 28% of all U.S. residents over the age of 25 hold a bachelor's degree or higher. Immigrants are also slightly more likely to work in the labor force than the U.S. population as a whole. However, the jobs immigrants hold are more likely to be low wage and hourly. So the median income of foreign-born households, which is $46,000, is less than that of U.S. households overall, which is $50,000. Yet immigrants have relatively high rates of home ownership. As you can see, only slightly less than that of all U.S. residents. Immigrants who are older, married, more educated, and have been in the country longer are more likely to own a home than those who are younger, single, less educated, and have recently arrived in the country. Immigrants also own businesses at a rate that is higher than the U.S. population overall. As of 2007, 10.5% of the immigrant workforce owned a business compared to 9.3% of the U.S. foreign workforce. And many of these businesses are quite successful. Collectively, immigrant-owned businesses generated a total of $776 billion in receipts and employed an estimated 4.7 million people in 2007. Now let's turn our attention to the undocumented population in the United States. Approximately 11.7 million undocumented immigrants are estimated to be living in the United States. About half of this population, approximately 6.8 million people, has arrived from Mexico. The next leading countries of origin are El Salvador, Guatemala, Honduras, and China, followed by the Philippines, India, Korea, Ecuador, and Vietnam. Similar to the immigrant population as a whole, undocumented immigrants tend to be clustered in 5 states: Texas, California, Florida, New York, and Illinois. As you can see, undocumented immigrants tend to have lower annual incomes than legal immigrants and the U.S. population overall. And this is largely because many undocumented immigrants work in low-wage or seasonal jobs where work may be sporadic. And undocumented immigrants tend to be young. 59% are between the ages of 25 and 44, and nearly half of undocumented adults are the parents of minors, compared to just 29% of U.S. adults overall. In 2008, approximately 7% of K-12 students had at least one parent who was undocumented. And in 5 states, at least 10% of students were the children of undocumented immigrants. Now, since this report has immigration reform in the title, I would be remiss if I didn't say a word or two about reform. In June 2013, the United States Senate passed a bill that outlined an overhaul of the nation's immigration system. The bill proposed sweeping reforms across a variety of aspects of the immigration process, including the ones listed on the slide, and it provided a pathway to citizenship for the millions of undocumented immigrants currently residing in the country. The bill is currently stalled in the House of Representatives, and while an overhaul of the existing immigration system is unlikely to pass this year, there seems to be a growing consensus that our nation's immigration system is broken. Whether reform passes this year, next year, or 10 years from now, in its current form or in a revised form, comprehensive reform is likely to provide both short-term legal status and a pathway to citizenship for the millions of undocumented immigrants currently living in the United States. And when this happens, financial service providers will be presented with a once-in-a-generation opportunity to provide immigrants with affordable, accessible, and high-quality services. And so before we hear from our guests from Carver Bank, a financial institution that is currently serving this demographic, I'd like to turn the presentation over to Marissa Bell-Torres, who will share with us findings from NCLR's recent report about how immigrants actually use financial services.
Hi, everyone. Can you hear me? I think that's a yes. So, hi, my name is Marissa Bell-Torres, and I'm a policy analyst with the Wealth Building Policy Project from the National Council of LaRaza. For those who are not familiar, NCLR is the nation's largest civil rights and advocacy organization serving Hispanics in the United States. And the mission of our organization really is to improve opportunities for Hispanics and Latinos living in the U.S. We have a network of over 300 affiliated organizations throughout the country who are CBOs or community-based organizations and nonprofits who are providing direct service to largely Hispanic communities throughout the country. So as Thea mentioned, I'm going to go ahead and give you an overview of a recent report that NCLR has released in conjunction with the National Urban League and the National Coalition for Asian Pacific American Community Development, which is kind of a mouthful. It's national capacity. So just to give you some background on how we went into this research, despite the positive signs that overall the nation's economy has emerged from what can arguably be called the deepest recession since the Great Depression, we know that the socioeconomic status of the communities of color in the country continue to lag behind that of other Americans. And just some statistics for you, between 2007 and 2010, Hispanic families saw their wealth cut by over 40%. And during the same time period, roughly from 2007 to 2011, the number of Asian American Pacific Islanders in poverty actually increased by more than 500,000, which represented an increase of 38% for that group. So in order to learn more about how our communities were recovering since the recession, and in particular the financial tools that families were using to restore their household balance sheets, NCLR, the Urban League, and National Capacity conducted a community-based research project in 4 states that had high concentrations of Latino, African American, and AAPI populations. And I'll refer to the Asian American Pacific Islander communities as AAPI for the remainder of the presentation. But we really wanted to answer a few questions about our community's use of and access to financial services and look at some of the barriers that they had to integrating into the financial mainstream. So specifically, we're looking at the types of financial tools people were using on a daily basis, why they chose certain services over others, where they were going to for financial information, and we also were interested in looking at the impact that technology had on Latino, African American, and AAPI communities when accessing financial services and interacting with the financial mainstream. So while the survey was conducted with affiliates of each of our respective national organizations, what I'm going to talk to you today about will focus on the results that we found within the Latino and AAPI communities, because unique to these 2 communities is the experience of the immigrant populations. So both U.S. citizens, as Thea mentioned, not all immigrants are non-citizens, and non-U.S. citizens, and their uses of financial products and services. So first, I'll cover some information we found on account ownership. So if we can go to the next slide. We found that consistent with a lot of the other national level research that is out there, FDIC's unbanked and underbanked study, we found that there were pretty high levels of account ownership across the groups. So while the majority of the samples that we talked to had some banking relationships, meaning that they had either a checking account or a savings account or both, we found that our AAPIs were actually more likely than the other groups to have a banking relationship, and meaning that they held either a checking or savings account. But consistent with other data, we also found that the likelihood of being banked actually increased with socioeconomic status. We found that account ownership really varied by citizenship, time in the U.S., and the language that people preferred to speak at home. U.S. citizens were more likely to be account holders than non-citizens. And among the foreign-born, the highest rates of ownership actually occurred for those who had lived in the U.S. For about 31 to 40 years. And the respondents who were least likely to be banked or to have that banking relationship were the ones who were at the extreme ends of the spectrum in terms of the years that they had spent in the U.S. And so you can see how that breaks down for both the Hispanic community and the AAPI community in that chart. So we also asked our survey participants about what factors were important to them when they were actually deciding where to do their banking or where to conduct their financial transactions. So we asked them about preferences and to identify what they considered most important. So they were able to choose from a number of options and sort of rank them in levels of importance. So when we asked them these questions about how they chose financial institutions, we saw that proximity to home or work was a top priority for almost all, half of all respondents, sort of across the board and across demographics. But we see, as you see on the far end of this chart, for non-citizens, that was also the case when we looked at them, broken out from the other demographics in the group. So distance from home was really a driving factor for people when they were deciding where to bank. And then for the overall survey population, the number of branches and account fees and requirements like a minimum balance requirement were also things that people really took into consideration. But then again, when you look at the non-citizens compared to the general survey population, the ability to communicate in a native language also rose to the top, and so there's the second highest ranking factor for non-citizens in deciding where it was that they would do their banking. And then we saw that pretty consistently, NCLR actually had done some research previously that just focused on Latinos in California. And so we saw very similar trends in that research that was conducted in 2012 to this research, which obviously had an expanded geographic reach as well as other communities of color that we were talking to. So as I mentioned, part of the survey was also focused on looking at the tools that people used in daily transactions, meaning, how did they pay for lunch or groceries every day. And what we found is that actually regardless of citizenship status, the cash was the most preferred method of payment for conducting those daily transactions. And we saw that for both the NCLR and the national capacity respondents. Well over half of NCLR participants, said that they prefer to pay for daily purchases in cash, and just slightly less than that were using debit cards, and only almost a third were actually using credit for daily transactions. And we found that nearly 3/4 of national capacity survey respondents preferred using cash for their day-to-day transactions as well, and then that was followed by credit cards, so slightly different than the NCLR respondents there. So aside from daily transactions, we also looked at bill pay. And this is where we actually found some differences. This is the chart that you're seeing right now is the overall for Hispanic AAPI and all respondents. But what we found was that there actually was differences for citizenship status looking at paying bills. And so over half of our non-citizen Latinos indicated that they were using cash, compared to only about 40% of the U.S. citizens. So there we saw the break between the groups more so. And we had 46% of our non-citizens using debit cards and 14% using credit. And then we also saw a difference in using online methods to pay for bills, where we had about a third of citizens saying that they did, and only about 20% of non-citizen Latinos saying the same. For national capacity respondents, the preference also was to use cash to pay bills by more people, about 45%, and then credit was the next most used method for bill pay as well. For our AAPI U.S. citizens, we saw a breakdown there that was different than looking at the overall general population, where we had more U.S. citizens using credit cards to pay bills, and then that was actually followed by cash. And then with the non-citizens, it was the reverse trend. So cash is sort of king across the board, and then, for daily transactions, but then when you look at bill pay, which is a slightly, different method of budgeting, perhaps strategies there, we saw that there was noticeable difference in the tools that people were using. So another part of our survey that, we haven't found in a lot of other research that looks at these communities of color and, low to moderate income populations in general was, again, the use of technology. So we know that, there's a trend happening where, a lot of information is being pushed towards online platforms, and with financial institutions, that is an area that's being heavily invested in. And I think I see a new report about once a week about trends in mobile payments, And so this is an area that we were interested in looking at because we do see reports also about the higher use of maybe, phones or mobile phones used by communities of color to access the internet. And so what we wanted to see was, is this actually translating to the ways in which people are conducting their financial lives? And so we wanted to see, is this an access point, or is this potentially a barrier that might be leaving, some of our community members out? So we had some questions that were focused on accessing technology, people's current use of technology in their financial transactions, and a future willingness to bank electronically. But what we found was, while overall internet access was high, the actual use of the platforms to conduct financial transactions was kind of low. And for people who did report that they had a discomfort using online or mobile technology, the chief concern amongst them was security of information, and that was true across all demographics. So what we found was a large percentage of NCLR respondents did have internet access, and most people were actually accessing the internet either at home or work. We did find that more citizens had internet access than non-citizens, and the majority of the survey participants from national capacity groups did have internet access overall as well. What we found was that more citizens than non-citizens have conducted banking online already. But what we found was also, what I thought was interesting, that the point where people were actually accessing the internet had an effect on whether or not they were using this technology to conduct financial transactions. And people who had access at home were more likely to be conducting a financial transaction online, to have already performed it, than people who only were accessing the internet on their mobile phones. So again, when we're looking at trends of people, who are moving a lot of platforms onto a mobile phone or a personal device, that, it's not that people are unwilling to do this, but we see this as a teachable moment, and a need for education really exists here, I think, because we know that these kind of technologies or these kinds of platforms can make people's lives easier, can be much more convenient for people, and can be more cost-effective to use these platforms, but there seems to be sort of a gap in information, perhaps about this, around the security concerns. So, maybe just a need for a little deeper dive into some education and outreach to let people know how to safely access these platforms and to use them for their benefit. So I would say that there's overall sort of a healthy skepticism around using these technologies. So another point that we asked our survey participants about was financial information. And we saw overall that there was really a need for financial information. There was a desire to access this, but people had sort of limited areas of where they were receiving it. Most people were turning to their friends and family if they wanted financial advice, and that was regardless of whether or not they had a bank account. But this particular slide is looking at credit score. And so overall, we saw that about a third of our NCLR respondents reported that they knew their score, with similar results for national capacities respondents as well. But we did see a larger difference between citizens and non-citizens and their experience with this area. So overall, for NCLR, U.S. citizens, 40% said they knew their score, compared to only 24%, as you can see in this chart. And then for capacity, it was also similarly a large difference there, 36% knowing their score for citizens, and for non-citizens, only 20% reporting the same. So we also asked people where they had learned this information, and we saw that more non-citizen Latinos were turning to banks for the information than Latino citizens, which we thought was interesting. However, Latino citizens did say that they had more of a variety of places where they were able to seek this information than our non-citizens. And that included reporting websites, what was it? It was annualcreditreport.com was something that people actually named as a source for this kind of information. So we thought that sort of indicated perhaps a higher level of knowledge about reliable sources for this kind of information. And we found that similarly, non-U.S. citizen AAPIs also were turning to banks for information on their credit score, and about 20% actually consulted with an online source for that information. We also found that over half of all Latinos surveyed indicated that they owned at least one credit card. So when you see a large number of people owning a credit card and a very small number of people knowing their credit score, that's cause for concern there. And we knew that a good amount of people are using these tools for if not necessarily a daily transaction for, for bills, so at least once a month, people are actually using these tools. So again, another need for financial information to get to our communities, we think is indicated through these findings. So another area that we looked at was where people would turn to if they had an emergency, and whether or not they were putting any savings away. So we found an overall trend that most people in the survey were actually saving on a monthly basis. We didn't ask them exactly how much they were saving, but they did. More people said that they were saving monthly than in other intervals. So that's positive. That's good, because we know that, again, still coming out of the recession, especially communities of color who were hit hardest, for people to say that they still are able to save, we think is a great indicator. We saw that about 70% of all Latinos said that they were saving with some frequency, and again, most on a monthly basis. But we did see a breakdown between citizens and non-citizens, where more citizens were saving monthly than non-citizens. We found that most people were saving by depositing into a bank branch at a much higher rate than actually via electronic deposit or through an ATM, and that was about 47% going personally into the bank, and 14% going electronically or into an ATM. And we found that more citizens had access to employer-sponsored retirement accounts than non-citizens, and that was at about 12% versus 4%. So that's a pretty low number, which is actually below or behind national trends. But then again, when you see the split between citizens and non-citizens, it's a pretty big gap. So, savings rates were high, but then we also asked people where they would turn if they had an emergency arise in the next year or so. And the personal network was really the source that people would most likely tap. We know that a lot of our communities and our families come from, or our families come from communities where there are similar socioeconomic trends. So if you're tapped out, you're going to somebody else who is also tapped out, that could also be problematic. And so we saw that, retirement savings was the second highest source of funds, which is also not a great indicator because we know that not a lot of people have this account. And yet, if they do need a saving strategy or emergency funds, this is the second largest area that they would turn to. So that's also problematic because that's taking away from long-term saving strategies. So you can see here that there's a variety of ways that people were tapping into emergency funds, but again, the personal network was really the strongest source of where people would turn for this kind of help. And, when we overall, obviously this survey did not look just at non-citizens and immigrants, but that was a subset that we really were interested in. As Sia mentioned, immigration reform. This is something that we talk about when it happens and not if. And so we really want to make sure that for the immigrants, in the U.S., that they do have viable sources for resources in the event that they need to adjust their status, they need a source for emergency money, or they need to fund an opportunity. What do they have available to them right now, and is the market positioned to take care of them? We found that citizenship status really affects various aspects of an individual's level of financial engagement. We saw a higher incidence of citizens who use a wider variety of financial tools beyond just cash. They did have a higher bank account ownership rate, and they were more frequently using technology in financial transactions when compared to the non-citizens in our surveys. So, we really feel strongly the acquisition of citizenship can lead to greater opportunities for financial engagement in the financial mainstream. And yet we see that for those who are eligible to become citizens, so again, not a monolithic group when we're talking about non-citizens or immigrants, that there are some people who are able, positioned today to pursue citizenship, but the cost is actually the barrier. So, regardless of immigration reform happening today, tomorrow, 3 months, a year from now, we have people today who should be able to take advantage of this, but for whom the cost of doing so is their major barrier or their obstacle. And just one last statistic to throw out for you. Amongst our non-U.S. citizen respondents, 20% of Latinos and 19% of AAPIs said that the cost of citizenship was the biggest barrier to pursuing naturalization. So I hope that that's a good background for the rest of the conversation and the strategies that we'll hear that are being employed now by financial institutions to engage this network. But if you want to see full survey findings, you can actually download our report where this research was pulled from off of NCLR's website. It's nclr.org, Banking in Color. Or you can feel free to email me directly, and I can give you some more information on our survey findings or on previous NCLR research. So thank you very much, and I look forward to the rest of our conversation.
Perfect. Thank you so much, Marisabel. That was an incredibly informative overview. And so now I'd like to turn to our guest, Blondell Pinnock, President of Carver Community Development Corporation and Senior Vice President at Carver Federal Savings Bank. And I'd like to kick off the discussion with a few questions that I've prepared for her, but then I'd like to open up the discussion for an audience Q&A. So I encourage you to continue submitting questions at the box on the right of your screen. And so, Blondell, why don't you begin by providing us with a brief overview of Carver Bank and its experience serving immigrants?
Sure. Good afternoon. Thank you, Thea. So Carver Federal Savings Bank was founded in 1948 to provide financial services to African American and Caribbean Americans who were disenfranchised and marginalized by mainstream financial institutions due, at that time, mainly to race. Carver today is a financial institution that is $639 million in total assets, and we still continue to serve predominantly low-income, minority, and immigrant communities throughout New York City, parts of New Jersey, and Lower Westchester. We currently have 10 branches throughout 4 of the boroughs in New York, and we have 14 separate ATM locations throughout Brooklyn, Manhattan, and Queens. 50% of our branches are located in low and moderate income communities, and the remaining are in close proximity to those areas. So for Carver, we understand very intimately the immigrant population. When we look at our branch footprint and when we look at our neighborhoods, we see the change in demographics. We see the different ethnic minority groups that are entering into some of our markets. And we are now moving forward with developing products and services to address those needs.
Thanks for that overview, Blondell. And so you teed up my next question quite well. In our report, in Investing in the American Dream, one of the 7 strategies that we provide is around understanding the customer's needs within your footprint. And so my question for you, which is something that you alluded to in your previous answer, is how has Carver come to understand the needs of the immigrants within the bank's footprint, and how has the bank designed products that respond to these needs?
Sure. So Carver started to take a really hard look at what was happening in New York City on a macro level, and then we started to look at a micro level at our neighborhoods and where our branches are located. So what we do know is that research evidences that more than 825,000 adults in New York City, and that's approximately 13% of all households, do not have bank or credit union accounts, but instead handle their financial activities such as bill payment and cashing payroll checks by using check cashers or other fringe alternative financial service providers. When you compare this to the national average, which is 7.7% of unbanked households, you see the vast difference between what New York City has from an unbanked population and what it appears to be throughout the country. The 825,000 plus unbanked New Yorkers would represent a population segment bigger than the population of Miami and Pittsburgh combined. We then did our own survey in 2010, and through the survey we revealed that up to 67% of the individuals living or working in the communities where Carver serves conducts their financial transactions with mainly cash. And I do think that the report we heard earlier substantiates that cash is still king in our communities. So what Carver did to address that, in 2011, we launched a product suite known as Carver Community Cash. And what this allowed us to do, we were able to offer products such as check cashing, reloadable debit cards, money orders, bill payments, and Western Union money transfers through our branches to individuals who did not have a bank account. And in doing that, we realized that we were definitely addressing a population that had not traditionally come to Carver, but now they were seeking some of the services that we were providing, because we knew that this population, the immigrant population mainly, that they were getting these services addressed through these alternative financial providers, namely the check cashing locations. When we first started Western Union, which was one of the first products that we rolled out, immediately we started to see an uptick of mostly Caribbean immigrants coming to our branches to utilize Western Union to transfer funds. And slowly, as we continue to roll out our products, we see that we have a larger Latino, Hispanic migration of customers coming in and using our transactions, especially in our branch locations in East Harlem and closer north to Washington Heights.
Perfect. So thank you for that overview of Carver Community Cash. In investing in the American dream, another one of the strategies that we offer in that report is that financial institutions should implement comprehensive alternative ID policies. And we say that because under the USA Patriot Act of 2001, banks and credit unions can serve customers without a Social Security number by accepting these alternative forms of ID, things such as consular IDs, foreign passports, and other forms of alternative ID. And so, Blondell, it sounds like you guys serve a pretty diverse customer base that includes both legal immigrants and undocumented immigrants. And so I'm wondering if you could share with us a little bit about how Carver Bank's customer identification policies are designed to ensure that all customers who are eligible can access your products.
Sure. Currently, our branches will accept a number of state-issued identification cards. So, for example, benefit cards, state-issued non-driver IDs, passports, military IDs, and alien registration cards. So we currently do allow and use those forms of ID that we consider to be primary for the purposes of opening up or starting a banking relationship. Now, in addition to that, what has come to the table most recently with the new mayoral administration is a desire to make the city accessible to all of its residents, including those whose legal residency has not yet been established. So the city has made a decision to move forward with the municipal ID program. And this has been implemented in other cities, I know in New Haven and San Diego, but New York's ID program will be the largest in the country. And Carver will definitely be participating with this Muni ID, as it's called, as a primary form of identification. Many banks right now will only accept this as a secondary source, still leaving many on the fringe from being able to access banking services. This program is expected to roll out in early 2015, and we are waiting for additional information from the city.
Great. And so, it's all well and good that Carver offers these products and that you guys have instituted these comprehensive ID policies. But can you tell us a little bit about how you think about marketing these products to ensure that they actually reach your intended market?
Yes. So for us, we definitely had to think about a targeted strategic approach to this market. So for Carver, as a 65-year-old institution, seeing the changing demographics of our neighborhood means that we also had to change our approach and the way in which we try to attract customers. There are many people that are new entrants to the market that have never heard of Carver and don't know our legacy or what we do. So I think one of the main efforts that we have taken on with respect to marketing is our working with many affinity groups and the relationships that we have. So there are many organizations, community-based organizations, that are located within our branch footprint. And what we have decided to do is to reach out to them, starting from a very organic grassroots level and just informing them and letting them know that we are here in the community, and these are some of the services and products that we offer. That has proven to be very receptive for the bank. They have been receptive of us and our ability to do that. I think the other thing that we have done from a marketing standpoint is obviously expanding our materials. So we print our marketing materials both in Spanish and in English. In one of our branches located in Flatbush, Brooklyn, which has a high Haitian population, we have in many instances created marketing material in Creole for that population. So we are actively engaging with our community stakeholders. We are working with our community-based organizations to help build relationships and let them understand who we are and some of the products that we offer. And we are also using traditional marketing tools and advertising on Latino radio stations and in Latino papers to let folks understand and know. And I think the other thing that we're doing at Carver is our employee base reflects our community. I think over 80% of our employees are African American and Latino. So we have Spanish-speaking tellers and branch managers within our branches, understanding the different needs that exist in our neighborhood.
Great. And Blondell, you actually led me into another question that I didn't ask you to prepare for, but since you're heading this way, I think you can handle it. When I think about marketing, marketing is so closely tied to customer service. Since so many consumers, not just immigrants, but a lot of consumers hear about products and services from friends and family, I think of customer service as so intimately tied to your marketing efforts. And so I'm wondering if you can just say a few more sentences about how you think about your customer service at Carver Bank. And before you do that, I'd just like to remind the audience that now is the time to submit any questions that you have. I have a few more questions for Blondell, but I would be happy to open up to audience questions in a few moments. So Blondell, why don't you spend a few minutes talking about customer service?
I think from a customer service standpoint, the last point that I mentioned, when I think about our employee base and who we hire, I think that helps us address the customer service need, because it's a lot easier for you to go to someone who looks like you or who speaks your language if you have any questions or concerns. And I think there's just a level of comfort that you may feel culturally when you see people that may come from your country or that may know you or just know you within the neighborhoods. So for Carver, I think it was important that our retail branch reflects our neighborhood and who's in our neighborhood and who we want to see come into the branches. And with that, we have been able to address a lot of needs because we have been able to sit down and talk to many people who've come in here to take advantage of the Carver Community Product Suite, and we've been able to counsel them and talk them through understanding the importance of having a banking relationship and how much they can save towards that end. So we do feel that the customer service part of what we do is an integral part in our hiring practices and who we staff our branches with.
Great. And so, at this point, clearly, much of this webinar has focused on the positive aspects of serving immigrants, and that's been a conscious effort because we really see there being a massive opportunity here. That being said, obviously serving any sort of a low-income or an underserved consumer is not without its challenges. And so, Blondell, when you think of, from your past experience at Carver Bank, can you tell us what some of the challenges have been that you've experienced with regard to serving this demographic?
Well, I think for us, we are a small community bank. We are less than $1 billion in assets, and so our biggest challenge would be our inability to market on a mass level the way that the globals do, or way that much larger regional banks do that are also in our footprint. So that for us is a difficult challenge, and why we opt to work with organizations and work with groups and community stakeholders and pretty much spread our information organically or through more of a grassroots effort. I think the other barrier that we experience is, people are creatures of habit, and you just have individuals who have always been and have never stepped foot into a bank. And even though we may be offering the same products and able to do some of the same transactions they're used to doing within a check cashing environment, it is difficult to have people change their behavior to come into a bank to do the same level of transactions. I think also when you're talking about immigrant population, besides the language barrier, which I think we are striving to bridge that, there is also a cultural barrier for some people, many people. There is a trust factor that has been broken with some financial institutions in their country, and trying to overcome that barrier or challenge to bring these individuals under the tent and to explain to them, the differences between a banking relationship here and maybe in the countries where they come from. So I think those are some of the main challenges that we experience here, and trying to bring especially the immigrant population under the fold into traditional banking relationships.
Great. And so now I'd like to turn to a few questions from our audience. And I'll begin with this first question. It's directed to you, Blondell. One of our audience members would like to know whether Carver provides a Spanish version of your deposit agreement and other product terms and conditions.
We definitely have Spanish speakers that are within all of our branches that are able to assist. Some of our documentation is in Spanish, and we are working to make sure that we transition more of our documentation from a retail or deposit opening position into various languages. I mean, for us in our neighborhoods, mainly it would be Spanish, and we are definitely moving to ensure that a lot of our documentation is bilingual.
Great. And so another one of our listeners wants to know, and I think this is a great question, and so Blondell or Marissa Bell, I'd like to direct it to either of you, whoever would like to take it. One of our listeners wants to know what happens to the accounts of folks who are undocumented and are deported. Do they have an opportunity to withdraw their money? Do they have an opportunity to recover their money?
I've heard anecdotally from some of our affiliates who do work with people that it's been a struggle to, when that has happened, to be able to recover those funds. So I think for the most part, if someone doesn't, I don't think that most people sort of have a heads up that that is going to take place, that they are going to be deported when it happens. So I think that it's been pretty difficult for people to be able to recover those funds. And as far as I don't know how long it takes before, when inactivity happens on an account. Not being a banker, I'm not sure if that triggers anything in a bank's processes, but it's been my understanding that it's been pretty hard for people to recover their funds when that has happened if they haven't had another signatory, I believe, on the account who has had access to the funds.
Right. I mean, from my experience, what would more normally happen if due to inactivity, if there's been if the account has been dormant for a while, that the account would go to the state. In which case, then it would be the property would then move to the state, and there would be another process that an individual or relative of the individual would have to go through to try and seek those funds.
Great. And so then another audience question is around partnerships in the financial services sector. And the question is, how can we in the financial services industry partner to offer these same services nationwide? And Blondell and Marissa Bell, I'd love to hear your thoughts on this question. Before I turn it over to you guys, I will say that a section of our report, Investing in the American Dream, does highlight a few partnerships. So the case study that we have with regard to partnerships is actually a partnership between City Community Development and Casa de Maryland. City partnered with Casa de Maryland to issue microloans with regard to citizenship. And so these partnerships are absolutely valuable tools to use. And so I encourage any of you who would like to know more about partnerships to pick up a copy of the report. Marissa Bell and Blondell, I'd be curious to hear from your past experiences how FIs can leverage these partnerships.
Similar to the, to that example that you're citing, Zia, we find out that there's been a lot of really successful relationships between our community-based organizations who do have those strong relationships with a local bank or a credit union in their area when they're able to partner. Some of it can really address some of those questions around marketing and getting the word out. If you have a CBO in your area or your community who has direct access to this community that you're trying to serve, if you have a product that makes sense for them, then I think it's a partnership there where either the financial institution is able to come in and educate the CBO staff or have a direct engagement with a program and link a service that the CBO is providing to the financial tool or product. I mean, I think that's perfection there, right? As far as making them national, scalability is always a question that sort of comes up. But, talking big term from the 32,000 foot level, I would say that, it can take a number of sort of moving pieces and different partners to get involved. So, if you start out with a really great program at the local level and you're looking at scale, then maybe it'll take the local government or something, or a municipality, or, get, other officials involved to really promote that and to, and to be able to bring it up to reach the levels of people that we know will need to be served. But I think starting from the community level and the local neighborhood level is a really great model, and we've seen it be very successful in a number of different geographies. But it's the one that you're highlighting, Zia, that is in the report, I think is a great example. But again, it takes the need of the financial institution to really, I don't want to say it's a shift from the way that they do business, but it is more of a mission-driven initiative, I would say. If you do, because it's not just offering any product that doesn't actually meet this customer where their needs are. It's having, exactly what Blondell is talking about, these services that make sense for this customer base, and then being able to offer that to someone who is able to reach this population, like a community-based organization who does have an expertise in dealing with this population that you're trying to serve. So I highly encourage financial institutions to partner with CBOs and nonprofits in their areas, if they have a product that makes sense for them.
Right. I would just be dovetailing on what Marissa Bell said. For me and for Carver, we have really benefited from our collaborations with our nonprofits and our community-based organizations in reaching out to our customer base and potential customer base. So that's always been beneficial for us. On a citywide level, who we have partnered with to help spread a little more, extend Carver's reach, has been the Department of Consumer Affairs, which is a city's agency that's truly focused on low-income New Yorkers and providing better services for them and putting them in contact with financial institutions and turning them away from alternative financial resources. So we have a number of programs that we have worked with the Department of Consumer Affairs, specifically their Office of Financial Empowerment. We do a free tax prep program with them, a VitaSite, Voluntary Income Tax Assistance program with them that we host in 2 of our branches. We also have a program that we also collaborate with them called Safe Start, which is really a city program, but it's for people who are not able to access a normal checking or depository relationship because of some past negative references that have come up on check systems. And this allows them a re-entry into the system. It allows them through classes to then open up an account here at the bank and to get an ATM card. So we offer this throughout all of our branches, again, in conjunction with the city's Department of Consumer Affairs. So there are certain programs that we are able to extend and just make it scalable for us, keeping in mind that we only have 10 branches. So it is the only way that we work, and we work well, is through collaboration.
Perfect. And so, in closing, I'd like to ask Blondell one final question, and Marie-Sabelle, please chime in if you have a reaction as well. But what advice would you give to financial institutions who are looking to get into this market and to serve immigrants, either legal or undocumented?
Well, I'll take it first. I think for the institution looking to enter into this market, I think it's important to do your research. It's important to understand and know the demographics of your market, and to understand what the patterns are, the spending patterns, and using a research tool like the National Council of LaRaza, and using that and figuring out what would best suit your customer base before you roll out a product, because what you would not want to do is to spend the time, the effort, the money, and the resources internally to create a product suite, and no one is there to take advantage of it. So I do think it's important to first start to do as much research as you can about your neighborhoods and about the products and services that you think would benefit your potential customer base.
I would absolutely agree with that, and I think that what sort of underlies everything that Blondell and all of her comments have made is that her bank recognizes that, this is a customer base that you need to respect, and, that's at sort of the heart of the service that you're providing to them. So when you respect this population that might be different from other populations that you have served, or might be a new market for you, with that respect then comes knowing the customer and knowing their needs and having products that are going to meet those needs. What we want to have is solutions for them that are not predatory and that do not take advantage of them, and that actually increase their financial capability and help them to really stabilize their economic situation. So I think when you marry all those pieces together, those are the makings of a successful relationship and a long-term relationship with this customer. It might start out with one deposit account, and then, or a savings account, and then this customer, grows in their financial capacity, and then you're able to offer them other products that make sense for them and that aren't taking advantage of their situation. But I think that all starts with respect and knowing the needs of the customer.
Great. Well, Blondell and Marie-Sabelle, I'd like to thank you two so much for providing such informative answers to the questions and offering up your own information. I think listening to the two of them speak, I think it's clear that there is a real opportunity here, and that comprehensive immigration reform, when it passes, and we're also saying when, not if, will also present banks and credit unions with, a once-in-a-generation opportunity to serve these consumers. But since so many of the needs of immigrants, both legal and undocumented, resemble the needs of other underserved consumers, financial institutions should not wait for immigration reform to pass in order to develop high-quality products for these consumers. Really, the time to act is now. So with that, I'd like to thank you all so much for joining the webinar, and I encourage you to download a copy of the report, Investing in the American Dream. Again, it's available at that link on the screen in front of you. Just to reiterate, I will say that the report has 7 key strategies for providers. We addressed a few of them on today's call, and it has about 7 or 8 different case studies of providers just like Carver Bank who are reaching out and serving these consumers successfully now. And a recording of the webinar will be posted online in the next few days, so I encourage you to share the webinar recording as well as the report itself within your networks. And thank you again so much for joining us today.
Thank you.
Thank you.
Bye-bye.
Bye-bye.